Thanks, Pam, for the kind introductions. Again, my name is Arthur Jimenez. It's a pleasure being here. Let me start sharing my slides. Give me a second. Let me just close this window down. Okay, Aaron, can see my screen?
Yes, but it's not in presentation mode.
Oh, right. Well, good afternoon again. My name is Arthur Jimenez. I'm on the business lending team. I'm the director of business development for business lending. My colleague Sarah Stroni, she'll also be joining us, but I'll be driving most of the presentation here. And we just really want to talk about kind of more of a refresher of what PIDC offers. So I think I saw the registration list. Sounds like there's some clients of ours here already, so you might know how we work, what our products offer. But we also have a good mixture of CDCs and businesses. And I just want to recognize we have Councilman Curtis Jones here. Thank you for joining us. But yeah, again, this is a refresher we are offering. We might provide some more insight about like special products that we don't usually offer, but it's more become available because of the pandemic, COVID-19 pandemic. So we'll also cover that shortly. For those who don't know, PIDC's mission is to connect people, places, opportunities to spur investments, support business growth, and foster development that creates jobs, revitalizes neighborhoods, and drives growth to every corner of Philadelphia. We're really proud to have almost touched all of our products and touched about 90, I think 96, 97% of all zip codes in Philadelphia. So really proud of that. And our vision is to have a Philadelphia economy that is growing, diversified, and inclusive, producing high quality life for all residents, businesses, visitors, and workers. So to achieve that vision, we really have three major pillars that drives our strategy. One is supporting growing businesses, which is primarily through business lending. Second is investing in high impact community revitalization. So that's done through our team at Real Estate Finance, and also creating workplace for the future. So we also have a small real estate services arm that oversees some property for the city and oversees also the Navy Yard. And so why would a borrower have to come to PIDC? What are the general reasons why? So there's usually they come to, so PIDC is, we're a nonprofit lender. We're also called a CDFI, a Community Development Financial Institution. So typically we work with businesses that do not have a banking relationship yet. Maybe they're too small or they haven't started that relationship yet. Or the bank says that their business is too small and they can't help them. So a CDFI is a great place for a small business to start. So typically is the company maybe, why can't they go to traditional bank? Is number one, their company is too small. Some banks have, they'll only start working with you, with the business owner, if you have a annual revenues of, it depends on the bank, but it typically starts at 10 million. I've seen 20 or 25 million. So these are much bigger businesses than your typical, say, corridor business. Second is your credit score may be too low. A lot of traditional banks have they have a cutoff credit score, so you have to have a credit score of at least 650, 680, sometimes 700. And then also they may say your business is not enough experience, so maybe have to start a business, or even if you have a few years, you might need at least 5 years. Again, it depends on the bank. Your business might not show enough profit. So these are loans. So we have to calculate the how the loans are paid off in the future. And that's typically through the business profits, or if it's a CDC, the CDC's net income. And we also, that has to be, usually the bank has to see there's a buffer, not just the existing cash flow, but there is an additional there's more cash flow. There's enough cash flow to service the debt and then some. So they like to see that buffer. A PIDC, we're a little bit more flexible how we look at that. So we can have a smaller buffer, but it's called debt service coverage ratio. Ours is just lower than the banks are. That's also number 5, unable to service the debt. So we can look at that several different ways. Perhaps the business is still small, but they're projected to grow over the next several years. So we can rely more on projections. Some banks can't do that. They can only look backwards. And then number 6 is the industry's perceived risky. A lot, like we've been talking to some banks lately, and they really just shy away from a lot of restaurants, hospitality businesses, construction businesses. We're PIDC, we're agnostic to that. I know we understand it's risky, but we can put some mitigants in place or look for mitigants to address that risk. But we do talk to all business and all industries. Also, what creates these cash flow needs is borrower needs. One is the long pay of receivables. So in our world, that can either be invoices for businesses or for CDCs. It could be grants coming maybe from the state or from the city level. And that creates a cash flow problem. Like perhaps it's reimbursable base. You have to spend the money first before you get the money. So we can help bridge those types of grants. As for the invoices, we can also give you an advance on those invoices. Secondly, is through expanding operations. Again, whether a business or a nonprofit, if it's additional locations or additional office space, that creates a cash flow need. Number 3 is reducing the cost of borrowing. And 4 is, reduce cost of borrowing. So that includes a credit card debt. Or high interest debt. Sometimes business owners get entangled into. If we can see that your business is strong enough, and that we can see if we can refinance that debt out, so we can lower the interest rate and lower your interest expense. And lastly is mobilization dollars. So if you have a new contract, for example, and now you have to hire more people, purchase more equipment, purchase inventory, our loans can definitely be used for that. Okay. So I'll start with the business financing here. And so at PIDC, we just really want to understand what the needs are. We don't really want to help make you memorize our products. I'll go through the products, but at the end of the day, you should be coming to us and not so much get tied into what specific product you're asking for, but what's the use, or what's the project, and then we can figure out what's the right product for that. The first one I'll talk through is a working capital equipment loan. So this is for small businesses and nonprofits. It goes from $50,000 up to $750,000. It can be used for working capital, like the name says, machinery, equipment, building improvements, leasehold improvements. So you might not own the property, but if you want to improve it, that loan can be used for that. Typically, it's a 5 to 7 year term. It's usually more on the 5-year side if it's just more general working capital uses. The interest rate, it varies because we have some additional funds now. So usually it's been 6.25%, but lately there is, because of I believe from the CARES Act, we were able to receive some funds from the EDA that we can offer some of these working capital loans. We call them now Restart PHL loans at 0%. So that's at a limited time. And it's something we've never offered before. This is something extraordinary that we're happy to provide. And it's really any type of business that is, we said historically it was for any business that was bouncing back from COVID-19. But now I think we're past that. And now it's really for any business that just needs a working capital. So I'll share my contact information after the presentation, but we're still trying to get this money out. It's 0%. It's a 5-year term, so it is the best deal we have in terms of loans. Next is the contract line of credit. This is more tailored for businesses that have contracts that are slow pays. It can be a city contract or a private contract, and it's kind of like invoice factoring. If you've heard that type of finance tool, we advance up to 90% of the invoice amount. We hold back 10%. We wait for the payment to come in from the actual contract owner. Once we do, we send you that 10% minus the small interest rate of 3.5% and the debit fee. And that 3.5% interest rate, that's annually. So if the invoice is only outstanding for, like, say 60 days, you'll pay a fraction of that. And yeah, it's advance and contract proceeds that can include labor, materials, equipment costs that you have come out of pocket for. Next is this is more of our legacy product, the capital project loan. It goes up to $50,000 up to $750,000. It includes a property acquisition, building renovation, machinery and equipment. It's really meant for businesses because these funds come from public sources. There is job creation requirements. So that is, you have to create one job for every $35,000 borrowed. That job has to be created in the next 3 years. So not right away, but is dependent upon that. And there is, if you are purchasing property, there is an environmental that needs to be done, environmental study needs to be done on the property. And if there's construction, it has to be prevailing wage. So those requirements make it a little bit more difficult to use, but sometimes for the larger projects, because the interest rate is about 3 or 4%, it's really low. It may make sense for a larger project. Lastly, is something that we've only rolled out about 2 years ago. It's a more streamlined version, I would say, of the capital project loan, in the sense that it allows small businesses, even nonprofits, to purchase a property that, they may have been leasing for a very long time, and now there's actually an opportunity to purchase from the landlord, or maybe it's a property like just down the street, very close by. Again, we want to help business owners and even nonprofits build equity in real estate. So the commercial mortgage helps to do that. It can be, again, property acquisition or building renovation up to $750,000. It used to be capped at $500,000. Now we stretched it to our borrower limit of $750,000. It is a 10% minimum cash equity that actually goes with the capital project loan, which is it is high, but traditional banks typically ask for 20% cash equity. So it is half of what they're asking for, and I think we still need some equity, and that's why we have the 10% there, 10% requirement there. The amortization can go up to, the payment term can go up to 15 years, but the amortization, so the size of the payment, can go up to 25 years. And that really helps to lower the payment. Yes, there's going to be a balloon at the end, but by that 15-year mark, the business or nonprofit should be much more in stable position to refinance that loan if it had to. The rate it was at 5.5% before. Now that's been lowered to 4.5%. And it does reset after 5 years, but I think only by 0.25% if it ever does. So it's a very small increase. Just because the rate is so low, we have to make sure we have to understand what the market is after 5 years. Okay. Next slide here. Actually, I want to give the opportunity for my colleague Sarah Stroney. Is she here to speak to the slide?
I'm here, Art. Hello.
Okay. Go ahead, Sarah.
Great. Yeah. Hi, everybody. I'm Sarah Stroney, VP of Project Finance. I really handle, with my colleague Lawrence McComey, I handle really the real estate type projects. Art and I are always coordinating with our CDC partners because, as you know, it's really a gray area or in between where you're sometimes an operating business and sometimes a real estate developer. So we've we've utilized all of our programs for all these groups, and sometimes you're coordinating for your businesses. So we realize you play many roles. Again, just as Art mentioned, we don't want you to have to memorize all of our various programs. That is literally our job. But the first real estate, we just try to say, like, we have a flexible real estate debt product, which can do a lot of things.
Talking about how, Lou was talking about,
sorry, I think we might need to mute something. Okay, great. Sorry, I thought that was a question. So our flexible real estate debt is, again, it is really flexible. So this can be to a business, it can be to nonprofits, it can be to real estate developers. We of course, look for projects that align with our mission, but it's a really big range. We can go, we could do something small, as Art was mentioning. This says 500,000, but we actually have a product that can go lower. So we can do anything from like, I think the lowest I've done is 60,000, and then we can go up to 2 million. Sometimes we even go above that if there's a lot of job creation. We typically do expect, equity into the project of 20%, but that is not a hard and fast rule. And we're often, I think the point here on a mortgage is that we're often subordinates. We're often coming in a second mortgage lien. So you can get a bank loan, and then if there's still a gap, like you don't have quite enough equity, or the bank doesn't want to do the whole project, I mean, we can come in and fill that gap. So that's often a role we play. We can do long terms, and the rates really vary based on the program that you're utilizing and the risk. But we do try to be, we're usually a little bit above a senior bank, but we're way cheaper than like a hard money lender that a lot of our real estate developers sometimes use. I do want to talk a little bit about kind of the subsidy programs, because the debt it's a loan product, so you have to pay it all back. It's just a normal loan. We do kind of have two subsidy programs. I know a lot of folks are often asking us about grants. There's just gaps that can't be paid, by loans. So one is the RACB program through the state. That actually comes through PIDC. We're a conduit for that program. We don't make any of the decisions about that grant program, but we will ultimately be the conduit if you are awarded. The RACB program is really the only economic development grant program in the state that's really for large projects. It's for projects over $1 million, but it is flexible to the type of project or the type of entity applying. It's pretty flexible in that way. It does require a 50-50 match. And Art and I wanted to make sure everyone was aware of it, because a new round is opening October 18th, and it will be closing in November. So if you have a project that is, is buttoned up, you could, put together an application. We're happy, Art and I are happy to connect you to that information if you need more. And then the second one that I want to talk about is New Markets tax credits. This is a federal tax credit program. It is, it basically provides an equity investment into the project of about 20 or 25%. And it is if anyone has heard of it, it is a little bit of a complicated structure. And so it can be overwhelming to a lot of folks. But Lawrence and I are really here to guide people through the program. We have worked in the program my colleague Lawrence has worked in the program since it began. And I have an extensive amount of experience as well. So we could really guide people through that program. Sometimes we advise folks to get a consultant who can guide you through the program. But those are really great. That's a really great program for high impact projects. So we're talking either a lot of job creation or a extensive amount of new goods or services to the community. But other than that, it's really flexible to the type of project. So this could be something from anything from a manufacturer to a mixed use project with a grocery store and other retail. I mean, it could be a healthcare center. It really varies on the type of projects we've been able to do with this. Typically, we are looking at projects that are over 5 million, so it is on the larger side. We are taking a look at some smaller projects if they're equipment, but I'm not sure that this group would probably have equipment deals. But yeah, so those are some of the wide variety of projects that PIDC can help you finance. And as Art mentioned, I'm here to answer any questions now or later. So thanks, Art.
Sarah, let's save the questions till the end. And I am hearing some feedback. So if you can, please mute your computers or your phones if you don't have a question. Thank you. So next slide here, just it's a shout out. It's a public service announcement. I'll say for the RACP because this is a really short period. So the Wolf administration briefly extended a window to accept new completed RACP applications for potential applicants for the 2021 round through the DCED single application website. Again, this is new. So if you submitted it and I guess the last period was in March 1st, 31st, you do not need to resubmit. Again, the window is open from October 18th through November 1st. Yeah, so I just want to make sure that announcement went out. And I think also PICDC will be setting up something shortly or during the week. So this is this slide is really a kind of oversimplification of our approval process. So again, the timeline varies, especially between business lending and real estate finance. But I can speak about real estate, about business lending first. Typically, our process is about 45 to 60 days. It might be closer to 90 if we're purchasing a property, but it starts off with initial meeting, a conference call. We review the your project, look at some initial financials. Right now, lately, because of we've been moved, our application now online. I might ask you to fill out the application first, and then we can have a thorough discussion. But we see that's a better, more efficient way to exchange documents. And then if it's something looks like that we can do, I will, in terms of it's something that it's in PIDC's, within PIDC's lending limits, and it's projects we've done in the past, similar projects, we can go, I work with our underwriter to bring it to loan committee for approval. So before we do an internal approval first with our underwriter, and then if it looks like it should be presented to the loan committee, we do present it to the loan committee. The committee typically meets every 2 weeks. After that, our board has to approve it because we are a nonprofit, but the approval is not as stringent as the committee approval. And then the next stage is when the board approves it, the loan committee approves it, we can issue a commitment letter and we start drafting loan documents. And then we schedule the closing and the disbursement. Sarah, did you want to add on how the real estate finance team process could work differently?
No, Art, that's great. I think that works the same way. I just put in the chat, it's really dependent on the project. So if there's an acquisition and you're doing a lot of title work, or there needs to be an appraisal or environmental, sometimes that can slow down the process, or if there's a construction contract that needs to be negotiated. So we really see that it's really dependent on the client's project for how fast they're able to close.
Right. Okay. So these are kind of the 5 C's of credit, the 5 buckets we look at when we review the strength of the loan application. Again, I'll just speak about how business lending looks at it, and then Sarah could speak about what differs from real estate finance. But the first C is credit. Is character. So we look at the business owner's character in terms of their work history in the industry. Has it been? We like to see more than 5+ years, especially if it's a newer business. Have they gone through a downturn before and they've actually helped to stabilize the business? That's always something nice to see. We also include, we do review your credit report, the business owner's credit report. This only applies for business owners. For nonprofits or CDCs, that does not happen. And yeah, it's really just their experience, their credit report, and do they have the skills to take, if there's expansion plans, do they have the skills, not just for themselves, but someone on their team, maybe new hires or recent hires, to help them get to that next stage of growth. Next is collateral. So we call it like a secondary source of repayment. So that can include like business assets, equipment, inventory, any business assets available to put a lien on. If you're purchasing a property, that can also be used as collateral. That will be the primary source of collateral. And then if there's a shortfall, let's say if it's a small business that's applying for a $5,000 loan, there's not enough assets in the business, we may ask the business owner what personal assets can they pledge. So it's not a requirement, but it will affect the loan amount that we can be comfortable with lending out to the business owner. So you might be, say if you apply for $5,000, but there's not enough collateral to secure that entirely, we may have to lower that to $250,000, maybe $300,000. In most cases, we can still approve a loan amount, but it might not be the original loan amount requested. A cash flow, we do look at your financials, historical financials, and we call it debt service coverage test on that. We just want to see the profitability of the business. Has it been breaking even? Has it been, ideally it's been profitable every year, but we can work with businesses where, especially in COVID-19, the pandemic, there's a downturn in 2019 or 2020. And yeah, we try to work through that. And then in those cases, we want to see how is the recovery going to look like, what are the projections going to be. Are you pivoting the business? Are you adding more product lines, more service lines? That would be part of the conversation too on the cash flow. And capital, we want to see how much business has been invested in the business, how much capital has been invested. We'll try and understand what's the net worth of the business, the net worth of the owner. It's again it's not a requirement to have like a large net worth, but it does help with us understanding the risk of the application. And lastly is economic conditions, both for the industry and perhaps in the city. We just want to understand I think the type of business you're in, and especially if it's in hospitality or construction, we understand you have the mitigants in place to mitigate any potential risk in the future. Sarah, do you want to share anything specific for real estate?
One thing that comes up sometimes is that if someone is pursuing a construction project, we do typically require that there be a commercial lease in place before they take on that project. So that is probably one thing that often comes up and sometimes people are surprised about. So we want to make sure that if something's going to be under construction, that there really are kind of a guaranteed revenue source for that project once it's completed.
Okay, and similar to business lending too is I think just to verify that your business is located in Philly and can continue to operate, we will ask for a lease if you don't own the property. Yeah, that's just how it helps us to verify the location. Okay, on to the next slide. So our application now is fully online. I think it's something we've really we've gone to 100% of asking for this for all our borrowers. I think starting last year, really. It takes about 10 to 15 minutes to fill out. And it requests a lot of the basic information about your name, street address, asks for some questions about your financial history. You do have to say, especially for business owners, if you have any history of bankruptcy, we have to talk about that. If there is a history of that, it won't totally make you not eligible, but I think it's just something we need to discuss. Again, that goes same thing with collections, judgments, unpaid taxes. If there's unpaid taxes, we just like to see that they don't need to be paid off. It just needs to be a payment plan in place. And then at the end of the application, it'll ask you to upload the documents such as the personal tax returns, business tax returns, a credit authorization form to look at give us permission to review your credit report, personal financial statement, and some other documents, a tax certification form to make sure you're up to date on your taxes, your city taxes primarily. And then I'll, ask for like a business plan or more of a background of the business and what's the narrative, a short narrative about the project. And then once that's submitted, someone on our team does a pre-screen, and then someone on our team will contact you for the next steps. Sarah, do you want to share anything for real estate?
No, we use the same system. So yep, I think that was a great overview.
Okay. And that's it. So I really want to at least give close to half the time, about 20 minutes for question and answers, but this is our contact information. So that's my email address there on the bottom left, ajimenez@pidcphila.com. That's my phone number. I'll put in the chat once I get off the presentation mode. Again, we really want to hear. It's always best to contact us before you actually need the money. It's nice to talk about the project in advance so that we can prepare. Perhaps we can ask you to apply early so that when things do, like for example, like you sign the lease, then we have to move really quickly to get their loan approved. So it's best you factor in some additional time for us to talk early so we can be prepared, because it is a process, like I would say 45, 60 days, sometimes 90 days. It's better to engage early. This is the business lending team, and then this is real estate finance team, and Sarah and Lawrence. Yeah, and then I think we can open up for questions. Are there any questions in the chat?
Arthur, there's a question from Odessa Tate.
Hi, how are you?
Hi, Odessa, how are you?
I'm well, thank you. So this is definitely a separate conversation that I want to have with you regarding a few things. But I just want to know about the possibilities and the flexibility with the loans to make sure that I'm clear. Because we have a property in its own, but we have some options with it. So we have it where, we're deciding that we want to do 2 apartments. An apartment upstairs, which it already is sufficiency upstairs, and then creating one downstairs. But we're also a new CDC, so we need a new operable office in that front space. So I wanted to know, like as far as the funding to actually fix the building, because we own it outright, and then the possibilities, I guess, of possibly hiring staff members. We open up the front for the office. Like, what would be the variations? What would be the possibilities with the idea alone?
Sure. Yeah. So you're the CDC. This is for CDC, correct?
Yes, I'm a new CDC.
Yes, great. So you have to partially occupy the building.
Mm-hmm.
You have to have an office there to qualify for our loans. That's great that you have outside like tenants.
Hey, Art, sorry to interrupt, but I just want to say, just the commercial mortgage loan is really what you would need to occupy yourself.
Okay.
For like, you could have a third party lease. That would just be a different one of our programs, like with another commercial entity. Just wanted to make that clear, because I know some CDCs on the phone might have somebody else that they're leasing to.
That makes sense, Odessa?
Did that make sense?
Okay, so you said we could go with the commercial mortgage loan, and then it's a third party leasing.
Sorry. I think I probably confused things. So the project you described, I think Art is saying it totally qualifies.
Okay.
So the type of project you're talking about. What I was saying is, we have another program. If you were leasing that office space to someone else, that would also be fine. It would just be another one of our programs.
Okay, understood.
I understand now. But we're
Go ahead, Art. Go ahead.
Yeah, I think the commercial mortgage, I guess we can talk more offline, is a great product, especially if you own the property already and you want to renovate it. It can't be used for renovation.
Here's a question. I know you now. You are not Crystal.
I'm using her computer. First of all, as a full disclosure, as a board member of PIDC, I am so very pleased that you're doing this type of presentation. For you to take the time to codify all of the various programs, all of the requirements, and all of the types of materials that might be necessary to process an application. I mean, it doesn't get any better than that. Secondly, I would hope that more of my members in council took advantage of this orientation, or at least assigned a staff person to do so, because these type of commercial lendings, mixed use lendings, can change communities.
Absolutely.
Can totally change community. I will also state, and finally, and relinquish the mic afterwards, that this PIDC is not my grandfather's PIDC. And you can take it for whatever way you take it, but the reality is I have never seen that much diversity in our loan portfolio ever. And with that, I'm very proud to be able to say I'm a board member. And so keep up the good work, and keep marketing that good work.
Thanks, Councilman Jones, for sharing that. And yeah, we are very proud of, I guess Sarah and I have only been there for 5 years now. And I would say, yes, I think we've become more of, we've been more cognizant about who our borrowers are, making sure we reach all communities of Philadelphia, not just say Center City. And again, I think our products and our portfolio really reflect that now. So I appreciate those words.
So John Lenahan, who retired, I believe, and Evelyn Montalvo, is she still there?
Evelyn's still there, and she still talks about you. I know you used to work together.
I don't believe her, but thank you.
No problem.
So Arthur and Sarah, there's a question from Antoine.
I can just ask it. I know if you have to put it in the chat or just could you ask? So I put in the chat as a working capital. So if we've already acquired a building, would that be totally different from doing because I'm trying to put another store location down in North Philly, but we need to do the renovations. So we have grant money, but I don't know if that counts as equity, or do I still have to come to the table with another 20% equity that we have?
We would count grants as equity.
Okay.
Yep. Great question.
And you say you own a property, but the improvements would go for a separate property, or is that the same property?
It's the same property. We just have had some bad luck with other CDCs. And so that's why I was asking the time turnaround for acquiring property, because property is so hot in Philadelphia. Right. You really kind of have to have everything lined up, because when you ask, somebody to have their building tied up for 60 or 90 days, and then you can't complete the deal, you're going to get it, taken right off the table from you. It's a lot of investors coming down, and it makes it harder for, if you own a business, hey, I want to tie up that money for 69 days, and I can't tell you that's guaranteed,
Right. Yeah. But it sounds like, you have equity in the property, you have a grant. It's something we can definitely do there.
Okay. I'll send my contact information to the chat, the email chat. So I appreciate you guys.
Okay.
Oh, and if anybody see Curtis Jones again, tell him Antoine said hi.
Antoine, just a quick question for you. So Art and I know which of us to follow up with you. What organization are you with, or what is your business? So we know.
I'm Sweet Tree Hut. We're the vegan juice bar going to low income communities, trying to change the way people think about healthy foods. So I used to work with, at one point I was going to put an application in with Vaughn Teller. I don't think he's there anymore. I think he went to California.
Seattle.
But the Commerce Department pushed me more towards, I don't know if you guys ever heard of North Philly Progress Fund.
Yeah, they do good work too.
We worked with them.
So a week before closing, they pulled out on my deal, and I lost my building in North Philly.
Oh no.
Oh, I didn't realize that.
Yeah, so that's what it was like, one of those things where, who do you turn to? But at the table, I was promised everything from that company in front of 9 people in front of the Commerce Department. So a deal, a week before was like no time. And the thing, what I said to him was, we have another building that we can use to refi, and we'll just buy the building, and you guys can just do the working capital or the what we need to do for renovations, and they wanted to do the whole loan. So we ended up having to pull out from that deal the week before, and somebody bought the building next week. So we did acquire another building, which is larger, and we got it at a better price. So I guess you got to wait for good things sometimes. And now we're trying to finally get this build out done.
Yep. And you have a Commerce Department grant, right? Is it like NED or something, or empowerment zone, or?
We have an empowerment, and then we have the healthy food grant. So we got 2.
Great.
So it allows us to kind of have like a lot of stake equity in the game, and plus the building is paid off. So, just going through L&I and going through
And you
zoning.
occupy the building, right?
Yeah. This is for us to have a
Okay.
flagship store down North Philly.
Great.
So this isn't for other use. It's just for us to have one of the biggest mixture of produce and juice bars in North Philly.
Yeah. Oh yeah, definitely something. Since you're occupying the building and you're the business owner, I would definitely happy to work with you.
Okay, I appreciate that.
Okay, no problem.
There's
I have a question.
There's another question from Ryan and Antoine. I know you have another question, but Arthur or Sarah, do y'all want to take this other question from Ryan before y'all go back to Antoine?
Antoine can go. Hi, my friend. How you been?
Yeah.
No, Antoine can go. His juices are
Is that
amazing.
Ryan Spack? Is that Ryan Spack?
That is Ryan Spack. How are you, my friend?
No, you know what? I just accidentally had my hand still raised. All my questions were answered. So it's back to you, Ryan. How are you, big guy?
All good.
Great.
If you haven't had one of his juices, I highly recommend it.
Yeah. And if you haven't been on the other side of Baltimore Avenue, that's my guy.
I'm a big fan.
Mm.
My question is actually in regards to the rack beat. One, I'm a client of PIDC's. I've been a partner through a multitude of products. So I highly recommend their team. They are incredibly capable of being creative and getting projects out of and off the ground in a multitude of ways. The question I have in regards to the rack beat. So we filed. So I'm a board member with a nonprofit, the Philadelphia Urban Writing Academy. Pura, as it's known, came from a collaboration of the writers, director, producers, myself, and some of the riders from the Fletcher Street stables. We were the team that put together the Concrete Cowboy movie. Our goal with this nonprofit is to create and establish stable classroom space, as well as potentially a Black Cowboy museum. First, stables are the key. And with Curtis Jones's office, we have been working very, very diligently on putting that together in the Cobbs Creek neighborhood. We are incredibly excited about that. Hopefully have more news in the coming weeks. But in the meantime, we've been offered the opportunity to apply for the RACB. And the form that we were told to fill out was this 2-page, very simplistic information form. And from what you said on the call, we actually have a very, very short window to fill out the full electronic document, which is a multitude of pages. And so here's my question. My question is, do I go back to the wonderful state rep Morgan Cephas's office and say, hey, thanks for the information sheet, but we actually just found out we actually need to fill out this full e-RACB document, or do I just file that through your office?
Yeah, okay, so a couple of things. I am going to put you in touch with our colleague Peter Silo, who's our RACB contact.
Right.
Because it's a technical enough question, Ryan. I think it's possible. So I'm not sure how much you've done with RACB, but you have to have a line item in the budget to apply. And so I'm wondering if that thing you filled out was for your state rep to put a line item in.
Oh, that's very possible.
And I don't know.
I haven't gotten a whole lot of information.
Yeah. So Peter can help you through that because it's a pretty technical, I think it's like, we need to make sure you're able to apply.
Great.
It's one of those things where, like, if you don't already have a line item, Peter can help you find one that already exists. That's like relevant. So that there's a lot of flexibility. You just have to reach out to us. Once the application is released, you do fill it out directly on the website. We are not involved in the application at all, but of course you can ask us questions, as you're filling it out.
Awesome. Yeah, Sarah, if you can put me in touch with Peter, that would be incredibly helpful.
Yep.
And then my second follow-up question is actually regarding one of the first loan products that you discussed, which is the 0% interest product that's relatively new to PIDC. I'm both asking for myself and for 2 incoming tenants that we have in developments that we are operating in, one at 5050 Baltimore, the other one at Wade Flats. We have African-American owned dog grooming business in its looking to open its second location. Technically it's third, it outgrew its first and moved to a second. It's now outgrown its second. They have a 6-week waiting list in order to get an appointment. And so I'm curious, within our development budget for both of those projects, we had monies for build out, but it doesn't get those tenants the customization that they needed. It doesn't get them certain things. We as the developers are willing to put our balance sheet on the line for those tenants, but also know that those tenants have to actually be the borrower in some cases. And so can you tell me a little bit more about that product and how you intended for that product to actually work?
Sure. So it's supposed to be more streamlined in the sense that we only ask for 1 year's worth of financials or tax returns instead of the mandatory 2. Yeah, everything else isn't. That's really the most I guess lenient part of it is the 2 years. It's only 1 year's of tax returns. Is this a new business or they've been around for a while?
So one of them is a new business. One of them is a franchise of a national organization of Montessori schools called Wildflower. And the other is been around for 4 or 5 years.
Okay.
Yeah. But in terms of their balance sheets, in terms of their assets that they have to borrow against, they're a little light.
Yeah, and I think that's really what the Restart loan is for, really for those marginalized business owners. They can't get access anywhere. It might be a smaller loan amount. That's why we lowered the amount to low as 25,000. But it's better than no money at all. And it's really like, favorable payment terms up to 5 years, no payments till June of next year. So you got a good break. Yeah, so we've run into a situation where it is like the financials, the personal financial sheet, it looks a little bit light. Their personal assets are light, but as long as they have they can prove that they're gonna have a strong business in that new location. I think we're gonna have to dig into about what's the new location that's gonna look like, the new the demographics in that area in terms of the clients they're serving. But yeah, for the startup, there might be an opportunity to work with the state. So the state has really our only source of startup funds. The Restart, you need at least 1 year's worth. We can't go around that.
That's fine.
The state, there might be an opportunity to do a startup loan there. It's limited. I think it's up to $200,000.
Would that
project cost?
Would that kick in prevailing wage because it's coming from state funds?
I have to look into it. I'm not sure.
Okay.
Because we rarely use that, honestly speaking.
Okay.
It is something we provide. They have to fill out a letter of interest and the state has to approve it for us to move forward with underwriting. Okay. So it's the process is a little bit longer, but that's the only startup funds we have access to.
Hey guys, I hate to interrupt y'all, but before we go, because we only have about 4 minutes and we want to be respectful of people's time. There is one other question in the chat. Excuse me, Ryan, just 1 minute.
Yeah.
We have one other question, and if we're not able to answer it today before we leave, then we'll make sure that you get that, Arthur and Sarah. And anyone else who has a question, please make sure you put it into the chat. We'll try to get those over to Sarah and Arthur at the end of the day. Ryan.
Yeah, Pamela, sorry for interrupting. I was actually going to say, Arthur, are you the one who I would talk to about this?
Yeah, talk to me for now. Yeah.
Okay, that's fine. So I appreciate it. Sorry to take up so much time. Thank you.
So we're at the 3-minute mark before we go. And Kendall Reese had a question about PIDC. What is PIDC doing to help individuals who are less savvy with the process and lack knowledge of the borrowing space? And I know PIDC does periodically, actually pretty much year-round workshops and learning opportunities with small businesses, as well as CDCs and other for-profit entities. So Arthur and Sarah, if you could talk a little bit about what other further learning opportunities folks who don't have all the requisite necessarily experience could learn to better access these opportunities you have and access PIDC.
Yeah, I think I've spoken to you, Kendall, before. It really, we're very good about like talking over the phone, at least now, talking over the phone and walking through the process step by step and like really providing that assistance. So we don't just, send you the application, without any assistance. You just have to call us and we can schedule a meeting to walk through the process. And that's really, myself and Sarah's job. So to help you get through that application process. Sarah, you want to share anything else?
Yeah, I'll just add briefly, that is our job, and we do help make connections. If you're lacking experience in a certain area, we might recommend you work with a consultant, or we hook you up with somebody that has that missing link. So that is something we try to do as well.
Awesome. Again, these folks are really great to work with. Excuse me. So please make sure that you capture their information, their contact information. Everyone who registered today will receive a copy of the slide deck. So it has the contact information within it. And please consider giving them a call, shooting them an email. Also continue to look at their website because they offer regular programs, regular training programs like this, whether regular opportunities to network, to learn about what other businesses are doing, other CDCs are doing, just like you learned today. And I'm definitely, Antoine, I'm coming for that smoothie.
Every day,
okay.
too.
She don't get praises just generally. So when she says you on point, you on point. So thank everyone for joining us today. Thank you all for your wonderful work and trying to continue to advance Philadelphia's neighborhoods. PIDC, thank you very, very much as always for your great generosity and time and spirit. And everyone, we look forward to seeing you again here soon, hopefully in person at some point very soon. But regardless, stay well, stay strong, stay encouraged, because without you doing your work, Philadelphia doesn't exist. It's essential. Remember.
Thanks, ma'am. Thanks everyone for their time.
Bye.